Alrighty, good morning, everyone. Good morning. What's up? What's up? Hopefully, you guys are doing well. Today is Friday, October the 17th. Rocking no face cam today. My throat's actually really sore. So, if I'm a little bit raspy this morning, that's the reason why. But what's up, everyone? Good morning. Hope you guys are doing well. For the overall markets, we actually ended up rejecting off key levels yesterday. I talked about this a little bit more kind of in the pre-market game plan, but potential kind of rejections here. That's kind of been the theme all week is right bounces off key levels of support, rejections off key levels of resistance. And now you can see markets actually ended up moving a decent amount. We actually ended up moving all the way back down and towards our Tuesday's lows, which was our low for this week. And then we actually ended up having a nice bounce here. And now we're just right back up and towards our previous day close. So we'll talk about this here in a second. All right, let's go on to actually before we do that, what's up, everyone? Good morning. What's up, Hannah, B Roots, Andreas, Victor? What's up, Guru, Hardtick, Robert, Nontali, Wayne, Ryan, Costa, Majid, Sinna, Charles, Willie. Good morning, Martin, 50. I am Joseph, Juan, Monty, Deuce, Fabio, Miss Reggie, Daniel. Good morning. What's up, everyone? Yeah, hope you guys are doing well. Let's get right into the charts here. First things first, let's go on to the ES. So coming into yesterday, the key levels that we really have marked out was our Wednesday's highs, which was our 67.60, and we also had other key levels here as well, which was our Tuesday's highs, Wednesday's lows, and then also had your Tuesday's lows. So really this week, if you kind of just zoom out on the chart, we haven't had a clear direction in the overall markets just because of Friday's range that I talked about. If you're looking at Monday's price action, right, we had Tuesday, initial drive towards the downside, but ultimately pushed back towards the highs. Wednesday, kind of rejection. And then Thursday, yesterday, kind of drove back towards the downside. So as you can see here, really not a clear direction in the overall markets just based off of Friday's price action. And this is what happens, especially when Trump starts talking about tariffs, is there's a lot of uncertainty. So there's never going to be a clear direction one way. If you have a clear direction, usually it doesn't last too long. And then ultimately it's going to end up reversing. So you can see every day where we've had a nice trend, it's ultimately reversed within a few hours, or by next day it's already had a reversal. So if you are holding positions, be very cautious. You only want to hold maybe trailer positions, but you definitely want to be selling at key levels, just because the market will reverse. So as you can see here, at least coming to this morning, we drove all the way back down in the overnight session, and now you can see currently in the pre-market we're coming back up and towards your Wednesday's low. So at least for this week, we're essentially going to open up on Friday exactly where we opened up basically for the week, which is right around this 66.70 level. So coming into today here for Friday with no red folder news as well. And we already had a pretty big move in the overnight session along with the pre-market. I'll be a little bit more cautious coming into today, right? A lot of at least the theme has been, right, consolidation within the first hour to an hour and a half, and then we'll usually have a bigger move later into the session. So at least right off the bat, be a little bit more cautious. But the key levels I'm going to have marked out coming to market open is going to be this 6670. So coming into today, if we can get above your 6670, potential move back up and towards your Tuesday's highs, 6610. Ultimately, if we reject off this level, which is your previous day close, your Wednesday's lows, and multiple touches here as well, potentially we can see a push back down in towards our Tuesday's lows, which is going to be our 6600. If you go into the SPY chart, similar thing here. As you can see this a little bit more clearly, but this is our this week's price action here on the SPY. And you can see we're basically about to open up exactly where the SPY opened up for this week. So not really a clear direction here in the overall market once again. If you do want to see some upside, preferably above your Monday's lows for a push back up and towards your Tuesday's highs. If we reject off this area, then we could see a push right back down in towards that Tuesday's lows. All right, so this is what I have coming to today here for the SPY along with the ES. Let's go on to the NQ. Exact same thesis. Let me just grab some water real quick. All right, so for the NQ coming into today, key levels that we're going to have marked out is going to be this Wednesday's low here as well. If I was to draw this week's price action, it's just kind of ranging in between your Wednesday's highs along with your Tuesday's lows. What I like to see coming to today here for the NQ is it really just maintain above your Wednesday's lows for this push back up and towards your Tuesday's highs. So really the only key levels I have on the chart, Tuesday's highs and your Wednesday's lows, at least coming into today. If you break underneath, get back underneath that 24/7, basically that 24/700 potential continuation back down and towards your Tuesday's low. So really, as you can see here, we're just going to be waiting for the reaction that we have off of your key levels. You don't really want to marry a bias, as I mentioned. You just want to be waiting for the reaction that we have off of the key levels on the chart. So key level today at 24/720 here on the NQ. As for the QQQ, key levels that we're going to have marked out 598 Monday's lows. What we can draw out here is just your high from this week to the low this week. We're about to open up essentially right inside the middle of the range. Currently, you can see some buyers stepping in here. So for the QQQ, if we can maintain above your 598 Monday's lows, we can see a move back up and towards your 603, which essentially now is just your Monday's highs. If we want to see some downside, another possible scenario underneath your Monday's lows for a push towards the downside, or if price came all the way back up and towards your Monday's highs, you can be looking for the potential kind of pop and fade off your Monday's highs, 603 for a push right back down and towards that 598. So coming into today, we are about to open up essentially in the middle of this week's range here for a Friday. So I do expect a lot of kind of rejections and reversals at key areas today. So we'll see the price action coming to market open. But right now, right, with it coming inside of its range, also with it already having a pretty big move in the after hours along with the pre-market, I don't really expect too much within the first kind of first 30 minutes to an hour of market open. So I'm going to be a little bit more cautious, and I'm just going to wait for the reactions that we have around these key levels. Now let's go on to some other charts that we have. We can take a look at the SMH or the IWM. As for the SMH here, we're still fairly bullish. Higher lows are being built. We also have this flat top break here as well. So for the SMH, at least for the semiconductor ETF, I would like to see this eventual push back up and towards our all-time highs. Once we can get that push, I think a lot of semis are going to have nice moves towards the upside, or now it's going to be the break above your all-time highs here, which is going to be this 348. If you go into the IWM, this one had a really nice push yesterday, or sorry, the day before. We had this hold of your previous all-time highs, but now ultimately breaking back underneath. And now this one's all the way back down in towards our 242 here. So not as bullish now for the IWM. Once it broke back underneath that 248, I'm going to need personally that reclaim back above if you want to see any sort of bullish price action here, specifically for the IWM. All right, let's go on to some tech names that we have coming into today here now. All right, let's go on to AMD. So AMD on the higher time frame still looks really good in my opinion. Key levels that we have marked out is our 225. So our 225 is essentially the area that we broke out from. It's also our previous all-time highs here as well. Higher lows are still being built. You can see some buyers stepping in right off our Tuesday's highs in the pre-market. Now we're pushing back up and towards our Friday's Sorry, this is our Friday's highs from last week. So coming into today here for IWM, if you want to see any sort of upside, break back above your Friday's highs, push back up and towards your all-time highs is in play. So this is the number one scenario here for AMD for a potential continued push towards the upside. If we reject off this level, which is your Friday's highs, also your previous day lows, right? Potentially we could see some more downside back down in towards our Tuesday's highs if we reject off this 234. But what I'd like to see is really the reclaim back above, either right off the bat, or if we ended up rejecting off this level, I'd like to see the reclaim later into the session back above your Friday's highs once again. So either scenario here, I like AMD at least for a more bullish stance. We did actually end up hitting our all-time highs yesterday, but if we can reclaim back above key levels, I think we can get that break above your all-time highs. Maybe not today, but we'll see that potential move next week. So keep an eye out on your 234 here on AMD coming into today. As for Google, Google also hit your all-time highs yesterday. You can see a little bit of reaction. This was one of our main watches coming into yesterday. We end up having that nice retest off your previous day highs and nice continued push right in towards your all-time highs. As you can see, a little bit of sellers stepping in, and now we had that push all the way back down in towards key levels. So at least coming into today for AMD and Google, we actually ended up rejecting off our all-time highs yesterday. So if we're looking for that bounce play, I'm still bullish just because we hit our all-time highs, but I don't like this setup at least for Friday just because we hit one of our main objectives. But for Google coming to market open, right, potential reclaim back above our last week's highs for a push towards the upside above your 251. Another possible scenario is, yeah, this is really the only scenario, right? Reclaim, similar thing with AMD, reclaim back above. Now it's going to be your previous day lows along with the key level here as well. So what we have is going to be just this 251.50 coming into market open. As for a few other tickers, let's go over Tesla here. As for Tesla, coming into today, the key levels that I have marked out is just your Tuesday's low. So you can see we're just consolidating here on the higher time frame. So not really too much to talk about on a couple of these tickers. But Tesla, if I was to just draw this box, you can see higher time frames, resistance level, and then we also have our key level support here as well. So when we're inside of this range, you just want to be a little bit more cautious just because, right, if the higher time frames are consolidating, the lower time frames, they're not going to have a clear direction. So you're just going to look for primarily just scalps. If I was to draw this week's price action, draw this over, as you can see right here, right, Monday's highs, Monday's lows, right? You can just draw these key levels. You can see basically stuck inside of a range here based off of Friday's range. We can even draw out a bigger range, and then you can see right in the middle. So if we're opening up right inside the middle of the range, there's most likely not going to be a clear direction here on Tesla. You're just going to be looking for the reaction that we have off key levels. If you can reclaim back above your Wednesday's lows, potential pushback up in towards your Monday's highs is in play, which is your 436. If we ultimately reject off this area, potential continuation right back down in towards your 420. So this is what we have for Tesla. Let me grab some water here as well. All right, let's go into Apple. All right, so for Apple here on the higher time frames, basically a lot of these charts look fairly similar. If I was to look at the QQQ and I'm looking at Tesla and Apple, really there's actually a lot more volatility here on the Qs and SPY than some of these tech names. So you definitely want to be, if you're looking to trade them, this is a scenario where I'd much rather trade the actual indices over the tech names in itself, just because the indices has more volatility. There's not really a clear direction on the market. So if we're looking to play rejections and bounces off key levels, right, the best name to play it is going to be SPY and Qs because those are going to respect the levels the nicest. As for Apple, similar thing. If I was to just draw this week's price action, really small range coming to this week on Apple, especially compared to Friday's drop that we had. So for Apple, similar thing, no real clear direction here on the overall markets, just because the overall QQQ and SPY don't have a clear direction. But the key levels I'm going to have drawn out is going to be your previous day lows, 245. We also have your Monday's highs here as well. So coming into today, key levels I'm going to have marked out. Monday's highs, we're currently opening up right inside the middle of the range. Two scenarios, either the break above your Monday's highs for continuation towards the upside. Another possible scenario, kind of bounce off your previous day lows. 245 for a push towards the upside. As for some downside here, potential pop and fade off your Monday's highs, or if price got all the way underneath that previous day lows, hold underneath. Potentially, you could see a little bit more continuation down towards your September 18th highs. So that's what I have for Apple. Let's go on to Nvidia. Nvidia is the weaker semiconductor. You can see it's actually made a fresh low here in the pre-market. Ultimately, now we're having a little bit of a bounce. But for Nvidia, this one has been weak compared to the overall indices. Really, all week has been kind of holding underneath key levels. In this case, holding underneath that Monday's lows. Now we actually just made a brand new low, but ultimately getting bought back up here now. As for AMD, sorry, as for Nvidia coming into today, key level previous day lows here marked out. If we can reclaim back above your previous day lows and hold above your previous day lows, potentially we can see a push back up in towards your 183. Only way I like to see some more downside consolidation underneath your previous day lows. Potentially, you can see now it's going to be your Wednesday's lows and your pre-market lows, and potentially your 175. So keep an eye out on Nvidia. Key level that I have marked out, as I mentioned, 179 coming into today. Now this is now let's go on to some other tickers that we have here as well. As for Amazon, a lot more consolidation. We actually made a brand new low. Now we're getting bought up here. Amazon been definitely a lot harder of a name to trade intraday. Not really too much to talk about on this one. As for Meta, a lot more consolidation here as well. And then if you look at every other ticker, these ones are pulling back. Microsoft right at key levels here. So we like to see kind of the reactions that we have off of these higher time frame key levels of support. So now, if you guys do have any charts or any tickers you'd like me to go over, I'll probably go over them for the next kind of 5 to 10 minutes. I'll go over my game plan once again, and then I will get ready for market open. All right, if you guys do have any charts or tickers, you guys can drop in the chat. I didn't even realize I had my mic muted. Yeah, that's my bad. I guess my mic was muted for like probably like 2 minutes there. Yeah, I got it. I didn't look at the chat and I was blowing my nose. That's funny. Okay. Yeah, that's how slow I am this morning. But for Oracle, yeah, really not too much to talk about. We had that break above your 310. We had some news yesterday that I talked about, but now we broke underneath. Palantir I mentioned, we kind of just bounced off this 172. So not too much to talk about here now. So a lot of these are similar, right? They have no higher time frames. We're just basing it off of intraday price action. We're taking it day by day just because there's more information that we have. Every single day we have more new information, either regarding tariffs, regarding something. So that's why we're just basing it off of key levels. Don't marry a bias because, as I mentioned, kind of the start of the week, if you have a bias, especially once we had that tariff news, which was on Friday, you don't want to have a bias, right? At least a hard bias. Before, we were having a fairly hard bias towards the upside just because every dip was getting bought up. Now you want to have a very soft bias. You want to be open and playing both sides of the market. If I was to just draw your Monday's highs and your Monday's lows of this week, you can see how many touches we could have been looking for just based off of these key levels, just because there's no real clear direction in the market. If I was to draw Monday's highs and Monday's lows, right, price drop right off the bat, pushed towards the upside, broke above, rejected off your Monday's highs, came all the way back down. This is where it bounced from, and then ended up turning into support on Wednesday, and then came back down. You can see more touches, more bounces, and then even yesterday, look at how many reactions that we have off of just strictly your Monday's highs and Monday's lows, right? There's been some really nice reactions off these key levels, but ultimately there's no clear direction, right? But you can play rejections, you can play bounces off these key levels, but don't look to hold on to your trade for an extended period just because, as you can see, whenever we have nice strong bounces, right, they ultimately get faded. If you have if you ultimately have rejections, right, those end up bouncing here as well. So, right, higher time frame, big moves intraday, right, no clear moves on the higher time frames. Just be a little bit more cautious. They're always just purely scalps now, and just the reactions that we have off key levels. Okay. Let me go on to some other tickers here now as well. Let's see this. Someone's like, is this pre-recorded? No, I was just a little bit slow. All right, let me go on to a few other tickers here now as well. Let's go on to MU. So MU, a lot of these semiconductors, this one recently hit all-time high. Similar thing to TSM here as well. Key levels that we have is your 200 key psych, which happens to be your all-time highs. Now you can see we broke above it yesterday. Nice kind of continued push higher, right? We're trying to hold above your all-time highs, and now you can see we're kind of dropping underneath. So for MU, nice kind of dip down in towards your previous all-time highs, 197. Continue push higher. Now for MU, if you want to see some more upside, break back above your 200 key psych, hold above that level for this potential push back up in towards your all-time highs, 207. If we reject off this level, then we could see a push all the way back down in towards that previous day lows, 197. So this is what I have for MU coming to today. If you look at TSM, we talked about the potential kind of earnings reversal play that we had. So we hit your all-time highs with earnings in the pre-market. I was expecting a potential earnings reversal. It actually happened within the first 5 minutes of market open. So within the first 5 minutes, already dropped towards the downside, and you can see end up using this level 306 as resistance, and then we end up having continuation lower all the way back down in towards your 292. So that's what I have for TSM. Really not too much to talk about here. Let's go scan for some potential higher time frame setups. As for OKLO, this one finally pulling back just a little bit here on the higher time frames. It still looks very much intact above your 140 here on the higher time frames. Let's go on to a few other tickers. You can see Hood, we've been talking about, been a little bit weaker. Now you can see it's dropping in the pre-market. AVGO still kind of consolidating. So a lot of these tickers, we don't have any sort of higher time frame setups. So it really just looks like we're going to try and look for the SPY and Qs and look for the reaction that we have off key levels. So if there's no higher time frame setups, we're just going to primarily be focusing on the SPY and Qs themselves. The key levels I have mentioned is just going to be now, it's just going to be your Monday's lows. Both these tickers, which in this case is your 598. And then for the SPY, it's going to be your 600 key sec. All right, let me grab some water once more, and then I'll go over a couple more tickers, and then I'll go over my game plan, and then I'll call it a day. All right, let's go over gold. So gold, I haven't talked about gold in actually a while here. So gold, I talked about this not too long ago, but this was all the way back from really the start of September. And we talked about kind of this flat top break, fairly bullish here on gold. We have multiple touches. We're expecting a pretty big move, but even this move is absolutely crazy here on gold. And you can see huge base, flat top break, and continue push all the way towards the upside. Now for gold, it is fairly overextended. So if I'm looking at this on the daily chart, you can see how big of a move we had since September. We've basically been going up in a straight line, right? Whenever you're at all-time highs, something like this, I wouldn't try and time the top. It's very hard to, since there's nothing to base it off of. If you're looking at this on the weekly time frame, it's similar thing. You can see it's fairly overextended. We're finally getting that kind of blow off the top move here on gold, right? It's very hard to time the top. If you're long, of course, take some profits. If you're trying to short this, be very cautious, just because whatever can go higher will go higher, but it is fairly overextended at this point. So key levels that you would mark out here now on gold, you're just going to mark out every single down close candle. So every single down close candle that you have, you're just going to mark out and drag it over. So this is a key level of support. Another key level of support here now is just going to be your down close candles once again. So you can mark out this. So at least coming into today here for gold and moving forward, the key levels, number one, I'm going to have this 4280. If you can hold this level, potential move back up and towards your all-time highs. If we ultimately break back underneath, then I suspect gold to come all the way back down in towards this 4180 level, which will be your higher time frame key level support for this pushback towards upside. So if you'd like to see the most bullish stance, right, maintain above your 4280. If it breaks underneath, potential pullback all the way back in towards that 4180 here on the higher time frame. So this is what I have for gold coming into today. Let's go on to now just kind of my game plan, what I'm looking for today. I do use a trading view to chart some markup here in the pre-market. In the pre-market live, yes, this is trading view. What's the meaning of earnings reversal? It's just if we have earnings high plus earnings low, then a potential earnings reversal is in play. So we're just going to mark out that earnings candle high, earnings candle low. If you want to see continuation, break above for a continuation higher. If you want to see a reversal, then you're going to see like a potential earnings reversal play. In this case, right, what you'll be looking for is, right, a weak earnings, right? There's no clear huge gap up in the markets. That's when you can expect an earnings reversal. Okay, let me go on to the game plan coming into today, and then I'm going to get ready for market open. Trading view lagging for everyone, it should be fine. Let's see how to join the live. If you're interested, it's in the description. What if the market price opens? I already answered that question, hard tick. If you go back and scroll back earlier in the session, you can answer that one. Or maybe my mic was muted, but in that case, the key level, we're going to be looking for the reclaim. You don't have to wait for the retest if you're looking for the reclaim. Okay. Does it cost to use TradingView? No, it's free. If you want data, then you can pay for it. For SPY and Qs coming to today. So the game plan here coming to market open, as I mentioned, is just going to be the reaction that we have off this key level, 660. So if we can get above your 660, potentially we can see some continuation towards the upside, break underneath your 660, potential continuation down and towards your Tuesday's lows. Exact same game plan here for the QQQ. If we can reclaim back above your Monday's lows, which we currently are, we like to see now hold above your Monday's lows for a push up and towards your Monday's highs. If we break back underneath, then potentially you can see a bigger push lower, which is your previous day lows and potentially your Tuesday's lows. So this is really going to be my main watch coming into today. Is just going to be looking at the SPY and Qs themselves. If I'm looking at anything else, I do like AMD for the reclaim back above your Friday's highs of last week for this push up and towards your all-time highs. As for anything else, really, I'm going to be a little bit more patient today just because it's a Friday. We've done a lot this week, honestly, to both sides, but ultimately now we're kind of fairly neutral for this week, even though we've had some pretty big moves in later into the day or big moves in the overnight session. But ultimately now we're basically opening up we're basically opening up today where we opened up at to start off the week. So I want to be a little bit more cautious today. I wouldn't be surprised if we just have pretty big moves, but we kind of stay with inside of its Monday's highs and Monday's lows, and it kind of just comes up, rejects, comes down, bounces, right? There's not going to be a clear direction, but I think we can still have a couple nice opportunities. Um, so yeah, that's what we have at least today. Hopefully, guys, hopefully my mic's working. Yeah, it should be working. But yeah, at least for everything else, let's see. Yeah, I would just be very cautious. Like this week has been a little bit trickier. If you trade the SPY and Qs and you primarily trade reversals, right? This is like perfect scenarios for you, right? If you just trade bounces off key levels of support, you have rejections off key levels of resistance, right? This is the best time to trade the SPY and Qs, and it's a really good time to honestly even trade potential. I don't want to say 0 days, but if you choose shorter expirations and you look for quick scalps in the markets and you're able to manage risk effectively, this is like a great time to trade those just because there's a lot of nice moves around those key levels. Whereas if we would like to look for trending markets, which that's when the break and retest works the best, right? There hasn't been any clear trends. You had a couple nice trades on AMD, right? Google for these all-time highs plays just because we had higher time frame thesis. But besides that, really AMD and Google, nothing else has been moving higher this week just because it's following along with the SPY and Q. So if you're trading, right, if you like trading trending markets, the trends don't last very often, or they don't last that long. So be very cautious and look to sell at key levels like majority of your position. If you trade right reversals and rejections at key levels, then right, that's perfect for you. But yeah, besides that, right, SPY and Qs, key levels, have these marked out 600, basically your Monday's lows where we already have multiple touches. Similar thing with the Qs here as well. We already have multiple touches, so we'll keep an eye out on this coming into today. Besides that, as I mentioned, I don't really see anything else on the higher time frame, so I'm just gonna be a little bit more selective today. We'll see if anything kind of shapes up coming into Friday. We did have some more news. We did have some more news this morning, and then we'll see what happens over the weekend as well. Let's see. How do you know when to wait for the first 15 to 30 minutes of market open? When we're inside of the range. So if we're inside of the range, you want to be a little bit more cautious. And it's really just based off context. So if we're looking at this week's price action and we can just draw from the high and low, I don't have anything clear. So I'm most likely just going to be a lot more patient and wait for the first kind of 15 to 30 minutes or maybe even an hour of market open just because we are opening up inside the range. So if we're opening up inside the range, you want to be cautious. If you have a higher time frame thesis like AMD or potential Google yesterday, where we're breaking above your previous day highs and you have clear objectives towards your all-time highs, then you could be a little bit more aggressive and you could be looking for a trade within the first kind of 15 to 30 minutes just because you have clear objectives towards your all-time highs. So it's understanding, right, if there's higher time frame thesis, if you have objectives, if we're consolidating like something like this, then you want to be a little bit more cautious. Yeah, that is going to be it for me today. Hopefully you guys have a great rest of the weekend. I'm going to call it a day here. I'm going to get some rest this weekend as well. For anyone that is in the boot camp, it's going to start Sunday. Hopefully all good for that. And yeah, besides that, what else? Yeah, if you guys did enjoy that, appreciate if you guys drop a like. If you guys want to join the watch list, of course, that is in the description below. And then I will see you guys all on Monday. All right. Take care, everyone. Have a great rest of the day. Peace.